The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the December 1st magnificent Monday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, and I believe we should always be pioneers of our future versus prisoners of our past. And let's always remember that life happens for us, not to us. When we can make that small little shift, that small little change, it will change everything in our world. Hope everyone out there had a terrific Thanksgiving holiday. Hopefully you had some time to rest, spend time with family, eat some turkey, eat a bunch of things, maybe a little shopping out there. Let's go ahead and get things rolling. It is Magical Monday. This is TFNN. I'm Steve Rhodes. Welcome to the show. We've got things moving all over the place here. So no lack of things to talk about right now. Dow futures off about 47 points. They're off of their session low. They're trading out at 17,764. S&P futures down about 8 points. Trading out at 2,058 and change. NASDAQ off 11. Russell 2000 off 5. King Dollar pulling back this morning. She's off 388 ticks out here, trading out at 88.02. So we've got movement in the currency market, specifically the Great British Pound. The euro is moving a bit out here. How about Goldilocks? Gold is up $6 right now. Was off at least $30, $29, late last night, yesterday evening as the market opened. So you've got a rebound going on in gold. Silver's up 35 cents. She's trading out at $15.91. Light sweet crude up 46 cents out there. It's trading out at 66.60. Sounds like the devil is working to me. If we take a quick peek across the globe out here, over in Europe this morning, the DAX is off 24 points. The FTSE down 57. Not a big deal there. The Nikkei up 130 points. But how about this Hang Seng, folks? Down 620 points here last night. Created a bit of an island out here. Now, I don't have volume. It has not taken out. It's moved back to a swing point here from November 20th. That swing point low, by the way, well, I wish I could tell you what it is. Apparently I've got to turn that data window on. Okay, there we go. The low of that swing, it's right in front of me. 23,252. You close out at 23,367. That low should be attacked. That's a pretty healthy move to the downside. Not that it's the healthiest move, the largest move to the downside recently. That took place on November 17th. Nonetheless, I know you don't really want to focus on those markets here right now, so let's go focus on our market. So what do we want to start with? Let's go start with first let's start with the futures market. Then let's go take a look at the currency market, and then we'll go on to gold and silver, light sweet crude as an example. So let's start off with our daily charts here. Let's start off with the Dow futures. So the Dow futures got up to a high here on Friday during that shortened trading session. Got up to a high of 17,877 in the futures market. That was a new high out there. I don't think the Dow itself made a new high, but the Dow futures did. Now, if we go from that actual high, or from the low to the high, let's just take a look at potential retracement levels here. So we're going to go from the low of October the 15th up to the high here on Friday. A little doji high out there. And there hasn't been much price erosion. Here's a couple things that we can notice as we take a look at the stock chart. Number one, two moving averages that are on my screen. Let me get rid of this one blue line that's going across my screen out here. We don't care about that. Just to clean it up just a tad. Okay, so here's what we know about the Dow futures. Number one, price this morning moved down, got down to a low of 17,701. 17,679 happens to be your 13-day exponential moving average. That's going to be your first line of support, potential first line of support out there. How about that little high pitch that snuck out of there? Don't know where that came from. Maybe I didn't even hear it. But that's going to be the first level of support. If we see it close below, we'll call it 17,675, 17,679. Then that sets up the potential move down to the 17,071 level. That's your dead cat bounce, 0.382 retracement. No big deal out there. In fact, it's the 16,713 that really could become the target. That's your daily market profile resistance level. Hasn't really been tested as a support area. But the first levels to be watching today, 16,713. 17,769, and then 17,071, which is your 0.382 retracement. That's what you want to keep an eye on inside of the Dow futures. Inside the S&P futures out here, same real pattern. Let's go take a look at it. I thought I did this earlier. It must have done it on a different screen. Let's go take a look at from its low of October the 15th. Oops, that didn't work out real well, did it? Apparently I'm a little rusty here from taking a little time off over the weekend. Okay, let's go. Try that again. The October 15th low to the high, and the high here inside the S&P, that actually took place on November 26th. That was on Wednesday, I should say. On Friday, it got to a high of 2,074. Yeah, so that's our high that we're going to use, 2,075 and a quarter. Now, if we take a look, you're going to see really the same kind of pattern set up here. If you're wondering where price fell back to, why it stopped there, I can't tell you the reason why it works. I just know that it does work. If you take a look at the 13-day exponential moving average, one of our numbers in our Fibonacci summation sequence out there. 2,051 and change is the number. You got to 2,052. So that's the area that you want to first be paying attention to. If we see it close below, we see price move below, close below certainly, but below 2,051, 2,050, that sets up a move down to 2,038. That's your TAS market profile resistance level. It was tested. It was tested back here between the 17th of November, the 18th, the 19th, the 20th out there. So that's a tested area of support. You break through that, 2014 becomes your next area of potential support, and a break below that, 1975. Those are the numbers to be watching inside of the S&P futures. We don't really need to take a look at what's up top because there's no resistance to the upside here. So you want to be taking a look at levels of support inside of these two futures contracts. That's taking a look at the daily. If we go take a look at the NASDAQ out here, let's go do the same thing. Clearly I did all my work on a different tab, but that's okay. I don't mind doing the work over and over again. Now, inside of the NASDAQ, it shows a 1-to-1 A to B equals CD to the 709 area. If, in fact, the NASDAQ takes out the high from Friday, that high being 43.48, and the NASDAQ has been the strong dog out here, price should head to 43.93 out there. And that's where that would be headed to. But if we take a look at the retracement now off of the October 15th or 16th made the low. I think it's the low 36.91, 36.84. It's the October 16th low out here, all the way to the high on Friday. We take a look at that. Now, this just shows you the dynamic of the NASDAQ and how real strong this actually is compared to the ES Mini, compared to the Russell, certainly compared to the Dow futures. In this case here, the 13-period exponential moving average is 42.60. The low so far today has been 43.16. 42.60 versus 43.16. What's that, a 56-point move that it needs to make just to get down and test that level of support out here? So the NASDAQ has not really given any real signs of any problem inside of the market. Yeah, it's trading up by, about 10 points out there, but as you can see, really no big deal. If we take a look at the Russell 2000, well, that's interesting. This doesn't have the, let me switch over to a different tab here. That doesn't have the Friday action baked into it. Why not? Let me switch over to this tab. We may be skipping the Russell. Here we go. Here's the Russell 2000 on its daily chart. If we go from the low here inside of the Russell, that would take us back to October 13th. Remember, the Russell bottomed out before the other three indices out there, futures contracts. If we take a look at what the Russell 2000 has done, let me put up its market profiles. Let's do that out here. Give me a moment to do that. Where is it? Right here. Come on, where are you? Oh, it's gone. Okay, well, I'm just going to have to, it's pretty simple. I'm just going to have to put the template back up on the screen. Okay, better for me to give you all the information out here. There we go. Okay, so now as we take a look at the Russell, let's go back. Let's draw our retracement lines in from the low to the high out here. And what we can see here inside the Russell is even though it's got a new market profile today, we're going to ignore that. We're going to take a look at the market profile that's been in existence since November 14th. That's one with meaning. The low of that profile, by the way, is right around the 1161 area. The actual price that we've seen here this morning is 1161. So that's the area to be watching inside the Russell. Russell 2000 sold off on Friday, gave us a nice big old bearish engulfing. I do mean a big old bearish engulfing, a big bear hug out there. We'll see if from weakness we'll find strength out here. So the Russell is down testing the level of support. If we see that, in fact, break the 1161 area, then really the next move forward to make is probably down to, well, first you've got a swing point out here from November 19th. That price point is 1148. If you break that, you crack that, 1135 would be the move out there. So that covers the four index futures accounts. That should give you a pretty good idea as to where things are at. Now, let's go take a look at what's going on inside of the currency market. Let's go take a look at the U.S. dollar index. A 10-minute delay on the U.S. dollar index out here. At this stage, still just traveling sideways. The U.S. dollar index has, in essence, been consolidating since really the October 31st session. In October 31st, we saw that big move higher in the market, and really since the high of that candle, which is priced out at 87.24. We've pretty much seen a sideways consolidation move out here. So inside the U.S. dollar index, still just really consolidating sideways. If we do see any kind of significant retracement, the first area that I would focus on is really going to be off of this swing point low from October 15th to the high that was put in out here. Looks like that was on November 24th. So your first level of retracement, 86.99, 86.04, probably becomes the level where the U.S. dollar index would move to. Of course, it's going to need some help from its friends out there. Its friends being the euro, certainly. If we take a look at the euro, now the euro here may be setting up an A to B equals CD to the upside. Let's go take a look at its retracement out here. This is the euro futures that we're looking at. And if we go from the November 24th low out to the high out here on November 26th, we'll see that the euro on Friday and as far as this morning has only made a 0.618 retracement. That's right down at 1.2430 out there. If, in fact, this is an A to B equals CD to the upside, we can give you a price projection on what that would do. That would give us a estimated 1-to-1 price move out at about the 1.2589-ish area, 1 to 1.272, 1.2635. So the euro here on Friday, even though we saw the markets, we saw all the commodities moving lower out there, really in unison, what we did not see is a corresponding move between the U.S. dollar index. That also means we did not see that same move inside of the euro. What does that mean? That means a move lower in some of those commodities, such as gold and silver, maybe even natural gas out there, was just being thrown out by those that were caught on the wrong side of the light sweet crude trade out there. That is my hypothesis. There is no gosh darn way for me to prove that to you. But when I took a look at what gold did and silver, and that was a pretty big move, especially when you couple the prior two sessions. I mean, if we do that, let's just switch over to we'll have to switch over. How about that? How about that for a strategic exit into our first break here? You're just going to have to come back and join us, which I know you were going to do anyways. This is Steve Rhodes. This is TFNN. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is off 44. S&P down 7 points as we speak right now. Let's go take a look at Goldilocks out here. Now, we saw a low this morning inside of gold. Well, let me switch over to the other page. Let me grab the December contract out here. Trade out at 1182.80. Now, the move down in gold here this morning. Let's pull this back. Got down to the 0.786 retracement level. Not 786 retracement level I'm referring to. Is the one off of the low on November 7th. You had gold make a low of 1130.40. Made a run all the way up to the November 21st high. That was at 1207. Pulls back. Now, we saw pretty decent price. In fact, if you take a look at the close from November 26th, as we were all going into the holiday breakout there, the close was 1196. The actual low that came in late last night was down at 1141. So 1141 to 1196, you got, what, a $55 move inside of gold during a holiday out there. What does that mean? And the, some folks will say it had to do with the Swiss referendum last night and the price moving lower. I say BS to that one. What all that would have actually done is move gold higher. Not not the mere fact that because it didn't happen, gold was going to go lower. So I disagree with anybody that's got that theory behind that move. That doesn't mean that I'm right. I'm just saying I disagree. and I do disagree. Now, if we take a look at the candle formation that we've got here inside of gold right now, not a bullish, it's green. That's most certainly. It's well off its session lows out here. We really got to move down into some intraday time period charts. We'll do that really during the next hour of the show. I want to see how gold here trades. Volume-wise, I don't have the volume as we speak right now. For some reason, this says 11,000 contracts. I doubt that that's really what is going on right now. So I'm not going to rely upon that. I'm not going to rely upon that volume out there. But what gold has done, it's made the 0.786 retracement. It's rejected that area. It's trading right around its TAS market profile point of control. That's the area of price where both buyers and sellers are really most comfortable at this 1182 zone. Of course, if in fact we see gold get back above the 1207, then you've got an A to B equals CD to the upside. That A to B equals CD to the upside would give you a price projection inside of gold right around the price point of 1218, 1239 or so out there. If I take a look at, is it in gold? Let me see if it was, which chart that was on. Apparently it was not on that chart. Where else could I have possibly put it? Let me see. I don't think it was here either. I had some trend lines. I can always go back in there, but that's okay. Let's just move on to silver here. So you got silver's up 37 cents. She's trading out at 15.88. Now, if you take a look at silver got well below the its most recent low out here. And that was the one from November the 7th. That low, by the way, was $15.04 out here. Earlier or late last night, yesterday evening, we saw silver get down to $14.10. So I guess it was the silver chart. If you're watching us on Tiger TV, this is kind of interesting. There's two real trend lines. Let me do this. Let me first do this. Let me clean this up just a tad, turn a couple of things off. Then you'll actually be able to see it out here. Okay, so now we've got silver, and here are the two different trend lines. Let me get rid of this also. Okay, now if we take a look at this silver, which we are, this is the December contract, and you come to the August 28th swing point. I'm just simply using that high, $19.95, and I'm using the swing point out here. Looks like the high here from October 15th also lines up with the high of October 21st. That's the dashed red line going across my screen. That's a shorter-term trend line. The longer-term trend line inside of silver is the one that comes off of the July 10th high, and its touch point happens to be August 28th. That really is the level now that, in my opinion, silver has to prove itself to both you and I to suggest that the trend, in fact, has changed out here. Again, the volume characteristic that I have here in silver, I'm not going with, says 5,000 contracts. Maybe that's the case. I'm just, at this stage, it looks a little bit fishy to me. But what does not look fishy to me are these trend lines that are out here. The body of the candle is truly the essence of price, so silver's got to break through that trend line. That's a trend line that becomes pretty easy for you to go ahead and draw and put on your charts as well. So that's what's going on inside of the silvery and gold-looking metals. So if we take a look at light sweet crude, she's trading up 57 cents, trading out at 66.69. That's actually a little hammer candle that is forming out here. However, a lot of time left in the trading session. But if, in fact, light sweet crude were to just simply trade in this area the rest of the day, close out here, you would have a hammer candle that says 63.72 would be an important level of support. But I don't know. I suggest you look elsewhere for trades other than Texas tea. This is Steve Rhodes. This is TFNN. Be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow off 42 points, trade out at 17,785. S&P down 7, trade out at 2060. NASDAQ Composite off 11 points. She's trading at 4780. Russell 2000 off 4 points. DAX off 19. FTSE down 56. Goldilocks up $10 right now. Silver up 41 pennies. Looks like these metals are rejecting lower price out there. Light sweet crude up 58 cents. Leading the charge, the upside out here. Well, you've got the GLD, the Spiders Gold Shares Trust up 1 7/10%, up about $2. You've got John Deere and Company, GE. That ticker symbol is up 2% here this morning, up $1.81. Randgold Resources jumping in the lead out here. GOLD up about $2.38. Mostly gold. ARM Holdings up 78 cents out here. Amazon up 54 cents. How about that Amazon? My daughter, this is pretty wild. No, my daughter orders a Kindle for a present for her grandmother. So she orders that sometime Saturday before noon, something like that. Saturday, probably like 11:30, 11:45, something like that. The delivery date was scheduled for December 2nd, tomorrow. Sunday, yesterday morning. Yeah, it absolutely was. I'm pretty sure it was morning. Maybe it was early afternoon. The doorbell rang, knocked on the door. Who's that? No big deal. Get up, and it was the U.S. Postal Service dropping off that Amazon package from Saturday, late morning. That's pretty amazing. Forget about those drones. I got the U.S. Post Office. Amazing Sunday delivery out there. Pretty cool. In any event, lead the charge here to I digress. Lead the charge to the downside. You've got Google. That's off 350. You've got Canadian Pacific Railroad down 378. You've got Tesla off 383. Dover Corp down 330. Echo Labs off $3 and change out here. Greenbrier Companies off $3. Concho Resources off a couple of bucks as well. So, today you've got we're at the beginning of the month. So, happy December to each of you out there. So we end the month of November. We can take a look at what those monthly chart looks like. That means we've got fund buying out here. So all of the 401k, all the automatic pension fund contributions coming into the coffers of the brokers that manage those funds. So you've got funds that are going to be buying over the next couple of days. Hard to believe that the market will get out of control. But nonetheless, what we want to do is forget about what day of the month it is and just simply pay attention to the stock chart patterns out here. So we'll switch over to the summation index as we speak right now. And we've got really across the way, except for the Dow. Let's take a look at the New York Stock Exchange. Now, the New York Stock Exchange is a long way before the trading session is over. But we have seen the New York Stock Exchange this morning. Its price oscillator dipped down below the zero line. The New York Stock Exchange, a wider swath of the market, that's going to give us the better feel for what's really going on out here. Trouble under the covers, so to speak. As long as there is memory, I think it was around 520 net declining issues is what is needed today. I probably can look that up here. I think it was 520. Okay, so 520. In fact, right now as we speak, as we take a quick peek at it, let me see what we're looking at, 1208. So you got 1208 net. But of course, it's early. It's very early in the trading session. Nonetheless, you get 520 or more net declining issues. What does that tell us? It tells us the sellers or the bears have control of the New York Stock Exchange. As long as that price oscillator is down below that, says a change or potential change in trend would be coming. Should be in fact be coming. That's what that is suggesting to us. Now, if we take a look at the New York Stock Exchange, and I can't for some reason, that's weird. I'll have to do it on a different chart here to give you what the retracement levels. But that's the NYSE. That's the wider swath of the market. The Nasdaq Composite, as an example, its price oscillator right now is also below 14 below the zero line. And below the zero line says that the bears would have, the sellers have control of the market. A long time left in the trading day. I think on the Nasdaq Composite, it only needed, I've got it written down someplace. So 232 net decline, even less than what's needed inside the New York Stock Exchange in order to turn its price oscillator. Now, the NDX 100, just to show you the 100 strongest of the pack out there, it needs like 78. It needs nearly all of them, not all, but nearly all of them, to have a declining day today. And I just don't see that in the card. So we'll have some divergence out here. Right now, as we take a look at the summation index for the Dow, it's just sitting there. It's hovering right at the zero line out here. So, that's probably got another couple issues that it needs in order to be able to move south. Now, if all three are moving below the zero line out here, that'll be the first time that we've seen that in quite some period of time. That will tell us window dressing or not, fund buying or not, doesn't really seem to be the matter out there, and that some other retracement is in place. That retracement that I was looking for that should have taken place through last week, which appears to now have been maybe shifted a bit out here. But no, we just simply trade the patterns. Speaking of patterns, of course, we want to take a look at the VIX index right now. That's trading at 1416. For the key number here for us to be paying attention to today is going to be the 1456 level. So you're about 40 cents away from that. You get above that, That would be a close, or that would be a move. We don't care about a move above. We want to see it. We want to monitor whether it's a close above or close below 1456. If it's a close above 1456, that would tell us that some more serious damage would be on the way. Because anytime the VIX index trades above the 50-day exponential moving average, that's when you see the market begin to really move in a southerly direction out there. Now, I'm not just talking a penny or two. I'm talking, but a close. We haven't seen the VIX close above the 50-day since the looks like right around the October 17th, 18th, 19th area, somewhere right around. Well, close back. I'm sorry. Yeah, probably right around the 17th or so of November. I don't know what's going on with my cursor, and so I can't really give you the exact date. Sorry about that. Now, let's go. So that's a pretty good overview of what to be focused on and paying attention to inside the markets, at least in my opinion. Now, let's go take a look at some of these equities here that are moving in the marketplace. So let's go take a look at Rand Gold, GOLD as a ticker symbol. Let's go see what kind of volume we've got inside this. Now, this thing here is a nice bull sash candle, actually gapping up this morning. Now, when I say gapping up, I'm referring to where it closed on Friday. Closed out at $64.68. It opened here this morning out at $66.48. It did not gap above this candle, but it did gap up from that session. That's a pretty strong move out here. The move down on Friday, 1 million shares. So far, you're up with 163,000 shares. If you take a look at Rand Gold is clearly one of the stronger of the mining equities out here. What do I mean? Well, if you take a look at the retracement from October 31st low up to the high out here on November 25th, you'll see that price did not even make its way back to the 0.682 retracement level. This could be setting up an A to B equals CD to the upside, and it would be a doozy if, in fact, it can do that. That's on Rand Gold Resources. Let's go take a look at Gold Corp out here. That's up 94 cents. Remember, inside Gold Corp, the number that we're looking for is 2142. 2142 is the resistance zone. The resistance that was set up by the gap down between October 29th and October 30th, as Gold Corp was vomiting, so to speak, out there. Right now, you're trading at 2058. Actually, if we take a look at Gold Corp, it doesn't look too shabby out here. What do I mean by that? Let's take a look at the October 31st low to the high. Looks like the high of the trading session might have been November 19th. Gold Corp has only made a 0.382 retracement. That's really interesting because Rand Gold is much stronger than Gold Corp. However, if we take a look at basically the same swing points out here, from the low here on October 31st to the high out here, it's either November 19th or the 18th, doesn't really matter. It still only made a 0.382 retracement, and as it's not Schulte, it was Colonel Klink, wasn't it? It was Colonel Klink that said very interesting. Well, I would have to say I'd have to go along with Colonel Klink, very interesting. If, in fact, now volume here on the move on Friday, shortened trading session, light, so it's hard to really gauge. Friday's volume was 6.3 million shares. Pretty big volume, all things considering. But the move on Friday to me was just more reminiscent of you got people that were trapped on the wrong side of that light sweet crude trade. There was the talk about vomiting that was going on. I think that's where it was going on, and they just simply were liquidating. It was a liquidation event out there, and that just simply hit commodities. That's what typically happens out there. And I don't know if anybody else, and like I said, I wish I could prove it. I can't prove it. But what we can prove is that the Gold Corp, which has been somewhat weak out here, the retracement on Friday is very interesting out here. So I can tell you this much. If you take out 2142 and you get above the November 19th high with 12.7 million shares, you do with more than 12.7 million shares. We've done 1 million shares in 15 minutes of time out there. You will have gotten the bottom in on these mining equities out there. And with Gold Corp, if you can get above that, that says the GDX, the NUGT, that is where you would that you could certainly consider taking a look at that. Let's look at Barrick Gold. That's also one of the top 5 holdings out here. How about that? The Dow was off 55, as I was saying, top 5 out there. No coincidences like, hey, how about this? Barrick Gold as well. If we take a look at the retracements out here from November 5th, that actually, it did make a 0.618 retracement. Looks like almost to the T out there. 1183 was oh my God, it did. Son of a gun. How about that, folks? If you go from the actual low of November 5th, I kid you not, $10.90, that's the low. The actual high that is coming on this move was the November 18th high, $13.32. You go from the low to the high, the exact 0.618 number, $11.83. What was the low on Friday? $11.83 out there. How about that? Now, there were 13 million shares to the downside, but nonetheless, if in fact Barrick Gold is able to take out the high of November 18th, do with more than 26 million shares, you've done 2.3 million shares today. Looks like the bargain hunters are out in full force inside some of these mining equities out here. We got to keep a close eye on that. So it's Barrick Gold. That's made the exact number. Let's take a look at Gold Fields out here. That's up 12 pennies, up trading out at 421 right now. If we take a look at the gold, this one's really strong. This is like super strong. We were in this equity. We actually got stopped out of 4 of our mining equities on Friday during that throw-up session, all for a profit. But, we took quite a hit. It was a hit that I was not planning on taking. It was a hit that kept on ticking. Now, in the case of Gold Fields, this here didn't even make the 0.382 retracement. Did this morning, so it's interesting because this equity here actually gapped down just a bit at the open. 404 is your 0.382 retracement. It got down to 406 out here. Now, this is one of the stronger mining equities, so it's my opinion. Your opinion, too. Just take a look at that move off of the November 5th area. That's why during the first round of going into mining equities out here, as I was playing the bottom, the second time we played the bottom out here, this second time around, I stayed away from the GDX. So what I did was went after 4 of the best-looking holdings in the 35 or 40 issues that were out there. And Goldfields was certainly one of those, and this is truly still is one of the stronger positions out here. Goldfields also has this nice volume bar out here from September the 2nd out here. So again, if we put this on a weekly, I believe it's a high volume weekly bar out here. Let me put that out here. So Goldfields, let me see, yeah, it is a high volume weekly bar, and it's still, it's trying to get back inside there. No, it wasn't high volume weekly. I take that back. 22 million shares on August the 25th. Nonetheless, 22 million shares out there, and price was coming into with 36 million shares back on November 17th. Either way, that's the way you like to see it being done out here. So Goldfields is eventually on its way up into the 591 level, 613. Of course, that is just Steve-O's opinion out here, but a pretty darn good opinion. Now let's take a look at some other equities here that are moving. Let's move away from the gold. Let's look at some things moving to the downside. Tesla, TSLA is the ticker symbol, off $8. You would think with potential, I was thinking about this morning, potentially with regard to light sweet crude and the way that it is trading lower, that maybe something like Tesla maybe would get hit. But I think that most people that buy Teslas, their decision isn't really based on gas mileage, right? If it was based on gas mileage alone, they'd just simply go out and buy a Prius or something like that. So, but nonetheless, it is trading lower. It's trading out at 236. Let's see if we got an A to B equals C to the down that's been confirmed out here. 5.9 million shares on October 1st. I was taken out with 11 million shares. So Tesla has a confirmed A to B equals C to E to the downside out here. That's coming off of the high on September 4th as your A point, your B point down here on October 1st, and your C point was on October the 9th. So 1-to-1 A to B equals C to E. This would suggest that Tesla wants to go visit the 209.77 area. That would make a lot of sense to me because that's where we saw its last sign of strength out here, a little breakout that took place on June the 16th. If, in fact, the 206 level gives way, then price will come down and it will visit this high volume low on May the 8th. That is really the better buy out there, and that's at the price point of 178 to 194. Right now, we got the Dow trading off 82, S&P down 12, Composite off 39. This is Steve Rhodes. This is TFNN. We'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s enhanced the degree of accuracy in calling the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 87 right now. S&P down 15. Composite off 50 points. Russell down 12. Goldilocks up $20. I think we can absolutely throw out that theory that the Swiss referendum had anything to do with the movement in the price of gold out there. So more so, again, Friday's move, now for sure. If there is any certainty out here with regard to the commodities, you just simply had people that were trapped like rats. No question about it. After Thanksgiving, no less. with being on the wrong side of that light sweet crude trade out there. Now, light sweet crude is up $1.06 as we speak. That's not the trade that I would suggest that you go after. So you got silver up 65 cents. Gold is up $20 out here. Let's go take a look at a couple of the ETFs out there. Let's go take a look at the XLK, number one weighting structure inside of the S&P 500. Let's go see what it is doing here this morning. So this thing here has formed a little morning or evening star pattern as we speak right now. Let's take a look at some of its levels. Let me do this out here. Let's go take a look. Let me just put the better style template out here on my screen. Give me just a moment for this to populate. Okay, so as we take a look at light sweet crude, as we take a look at the technology sector, XLK, you got 2.1 million shares here this morning, of course, on Friday. 5 million shares during a lightened trading session. We'll call it 10 million shares. But you got 2 million shares in 25 minutes, so it's starting to push lower as we speak right now. This is a reversal signal, potential reversal signal, if in fact light sweet crude, if in fact the XLK were to close, $42.10 or lower out there, then you'd have a reversal signal. I'd have to say the key levels to be watching, just like when we began taking a look at the futures indices on the daily chart, same things here inside of the XLK. Right at the price level of 4170. 4170 happens to be the 13-period exponential moving average. The top of the TAS trading box out here is 4166. That ought to be a level of good support. If, in fact, that area breaks, then you're looking at 4125 as being the number. And if 4125 gives way, then what we will take a look at is a retracement down to about the 4029-ish range out there. Of course, inside the XLK, certainly you've got Apple as one of the weighting structures out here. We take a look at the price movement on Apple. She's down $3.55. Now, it's off of its session lows out here. It looks like Apple got down to 111.27. You're trading at 115.42 as we speak. Let's put Apple on a shorter term time frame. Let's put this on like a 5-minute time frame and see how this thing here has been trading as we take a look at Apple. So, man, one big push down here just in that 5-minute period between 950 and 955. That had volume of 12 million shares, so somebody unloaded. You have both sides of the trade obviously going. You had both a buyer and a seller out there. So that's let me put this on the 1-minute chart out here. I'm not going to go look at the time and sales report out there. Yeah, so it's during that 1-minute session out here, 6.2 million shares that were traded inside of Apple. So you had a big buyer and a big seller out there. What does that mean? Well, it just tells you what's putting the pressure on inside of the QQQ ETF up 95 cents as we speak right now. And if we just finish off by taking a look at the QQQ, of course, you don't want to look at there's the 1-minute chart. You can see that. But let's look at the daily chart here right now. Key levels of support inside the QQQ, 104.02. Break below that, 103.28 is the number. So right now you got the summation indexes. They're turned to the negative side inside the New York Stock Exchange, the composite, and the Dow as we speak right now. Folks, it is Magnificent Monday. Thanks so much for joining us here at TFNN. If you're out to start your day, have a great day. Look forward to seeing you tomorrow. Otherwise, stay tuned because hour 2 of the Trader's Edge will be up next. Take care, folks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.